Have you ever wondered how some people seem to quietly become wealthy without anyone noticing? 4 years ago, I met a 69-year-old man who turned just $10,000 into over $5 million. No flashy Instagram posts. No crypto hype. No day trading drama. He didn't even talk about it. He just followed a quiet strategy that millionaires have used for decades. While most people chase the next big stock or try to time Bitcoin, there's a group of investors growing their wealth steadily, in silence. And the most surprising part? They use assets that are so simple, most people overlook them completely. Today, I'm going to reveal 7 powerful assets that the top 1% use to multiply their money, calmly, consistently, and under the radar. These are the same strategies that have helped regular people become millionaires without needing to predict markets or take wild risks. In fact, Warren Buffett built nearly all his wealth after age 50 using these exact methods. And in private conversations, he recommends them to friends who want to grow their money quietly. What you'll learn today isn't just about where to invest. It's about a full system the wealthy use to protect and expand their wealth. No noise, no hype. Be sure to stick around for asset number 7. It's the one that brings everything together and unlocks the full power of the system. Missing that piece could mean missing out on thousands, or even millions, in the future. The market is shifting fast. Those who understand and apply these 7 assets now will be in a perfect position for long-term success. Let's begin. Asset number 1. Index funds and strategic ETFs. Many everyday investors try to time the market. But the most successful ones? They don't bother. They invest automatically, no matter what the market is doing. Take this example. If you had invested $1,000 per month in the S&P 500 over the last 20 years, you'd now have over $1 million. All without picking stocks or stressing about timing. But the wealthy go a step further. Instead of buying just one general ETF, like the standard S&P 500 fund, they focus on key sectors. They might hold QQQ for tech growth, BIG for companies with steady dividends, or SCD for stable income. These ETFs give you access to high-performing companies without needing to manage a single stock. And here's the quiet trick very few talk about: leverage ETFs. With small, careful positions in funds like UPRO or TQQ, which amplify gains from the S&P 500 and Nasdaq, investors can boost their results without needing to go all in. The goal isn't to chase the market, it's to participate consistently and intelligently. By combining broad exposure with targeted ETFs, you get both diversification and upside potential. And when markets dip, automated investing turns those moments into buying opportunities, not stress. The real key is automation and patience. Set up monthly contributions, pick your sectors wisely, and let time do the rest. Now, let's move to an asset that's completely different, and surprisingly profitable. Asset number 2. Self-storage units. When you think of real estate, you probably think of houses or apartments. But the wealthy are investing in something much more hands-off: self-storage. These facilities generate consistent income without needing to manage tenants or fix broken appliances. People always need extra space, during good times and bad. Businesses store inventory. Families store furniture. And the demand is steady. You don't need to buy a storage building to get started. Real estate investment trusts, or REITs, like public storage or extra space storage, allow you to invest with small amounts and still benefit from monthly income. Self-storage also has some of the highest profit margins in real estate. Low maintenance, low costs, and long-term renters. Many customers keep their units for months, or even years, providing stable, predictable cash flow. Let's keep going. The next asset is often misunderstood, but it's one of the most powerful wealth-building tools available. Asset number 3. Life insurance with cash value. Most people think of life insurance as something for their family after they're gone. But the wealthy use it as a living asset, one that grows money while they're still alive. With certain policies like whole life or indexed universal life, IUL, you can build up cash value over time, which grows tax-deferred. And you can borrow from it, without taxes, penalties, or needing a bank loan. In fact, many wealthy individuals finance business ideas, property deals, or big purchases by borrowing against their policies. They pay themselves back and continue building wealth, without losing their money or paying bank fees. IUL policies even link your growth to the stock market, but with protection against losses. So when markets rise, your value goes up. When markets fall, your principal stays safe. It's like having your own private bank that grows quietly in the background. You stay liquid, tax-advantaged, and in control of your funds, something traditional accounts can't always offer. And because these policies often come with built-in guarantees, they provide peace of mind alongside financial flexibility. It's a private, stable, and smart way to grow money. But what if you could invest in premium real estate, without ever buying a building? Asset number 4. REITs, real estate investment trusts. REITs give you the benefits of real estate, steady income and long-term growth, without having to manage tenants or handle repairs. And unlike physical property, REITs are liquid. You can buy and sell them like stocks. That means fast access to your money if you ever need it. Top REITs offer exposure to sectors like data centers, healthcare facilities, and even infrastructure, things that continue operating no matter what's happening in the economy. For example, investing in companies like Equinix or Digital Realty gives you access to the growing need for data storage. And REITs like Ventas or Welltower invest in healthcare spaces like senior housing and clinics. With regular dividends and long-term growth potential, REITs are a favorite among wealthy investors looking for quiet, passive income. But now, let's flip the game. What if you could become the bank? Asset number 5. Private lending. Most people borrow from banks their entire lives. But the wealthy often do the opposite, they become the lenders. Through platforms or private networks, investors can lend money to real estate developers, business owners, or other qualified borrowers, and collect interest, often at rates much higher than traditional savings or bonds. These deals are usually backed by assets, meaning your money is protected if something goes wrong. Private lending is quiet. It's direct. And when done right, it's one of the most efficient ways to generate income. Next, we'll talk about an asset that many ignore, yet it consistently outperforms traditional investments. Asset number 6. Dividend growth stocks. These are companies that not only pay dividends but increase them year after year. Think of businesses like Johnson & Johnson, Procter & Gamble, or Coca-Cola. They've been paying and raising dividends for decades. That means your income grows over time, without needing to sell your shares. Wealthy investors love these stocks because they provide steady cash flow and long-term growth. And when reinvested, those dividends compound, leading to exponential gains. Plus, in uncertain markets, companies with strong dividend histories tend to be more stable. It's like getting a raise every year just for holding the stock. Over time, your income can surpass your initial investment, turning small amounts into reliable cash flow. And since many dividend-paying companies are industry leaders, you're also investing in businesses that have stood the test of time. Now, we've reached the most important asset. This one amplifies the results of everything we've talked about. Asset number 7. Ownership in a scalable business. This could be your own business, a silent partnership, or a stake in a growing online company. Unlike stocks or real estate, a business has no limit to how much it can grow. With the right idea, structure, and systems, you can build something that generates income around the clock. And if you combine it with the first 6 assets, investing your profits, protecting your income, and growing steadily, you've built a personal wealth machine. The top 1% understand this. They invest in themselves. They build systems that pay them again and again. And they do it quietly. Now that you know the 7 silent assets, it's time to take action. Which one will you start with? If you found this video helpful, let me know in the comments. I'm here to bring you more real strategies that actually work. And remember, wealth doesn't shout. It whispers.